Records continue to be broken. The S&P 500 crossed above 3,300 for the first time last week. Meanwhile, the Dow Jones average also marked its own major milestone, trading over 29,000 for the first time ever. But the greatest weekly gains across the major markets were in the NASDAQ, as it surpassed 9,300 with a weekly gain of 2.29%. At the sector level, only energy ended lower as oil and natural gas fell again last week. The remaining 10 sectors closed higher, with 6 of those segments rising 2% or more last week. In geopolitical news, the US and China finally completed the signing of the Phase 1 trade deal last Wednesday. In the deal, China agreed to buy an additional $200 billion worth of American goods and services, more than it did in 2017, over the next 2 years. This works out to be roughly a 41% increase in exports for 2020 and a 65% increase in 2021. These are numbers that some analysts have said China will have a challenge to actually achieve in the coming years, especially considering the recent drop in US exports to China. In economic news, the Consumer Price Index was released last week, showing the unadjusted 12-month CPI for all items rose by 2.3%. This is the highest December reading since 2011, but still remarkably low by historical standards. Yet, the core CPI, a measure of the inflation excluding food and energy, increased only 0.1% in December. These results reinforce the Federal Reserve's desire to keep interest rates unchanged for the time being. Currently, there is little expectation that the Fed will raise or lower rates at all in 2020. Interest rates remained steady last week, with the 10-year ticking up to 1.84% from the prior week's reading of 1.83. This is 8 basis points below the 2019 year-end close of 1.92%.